chartered accountant by qualification, and I also invest in startups at a personal capacity. And Yeah, I'm a sportsman at heart and love to play cricket, love to play sports. That's a little bit more additional than what Shruti gave, but thank you for having me here at this, for this presentation and to probably share my knowledge and inputs on how to create financial models and how to navigate through it for early stage startups. So thank you to Wadhwani Foundation, and I hope that I can add value. Once you leave this presentation, you all are taking back something from these few slides. So the session will go a little bit like this, where this presentation I'm going to run through it, and I'm going to give you a good insight into how business planning, how financial modeling works, how valuations can be done, etc. And once that gets done, then we open it up for Q&A. And I'm happy to answer whatever questions you all have on this topic or any other topic related to your startup, relating to the startup ecosystem in general. Would love to, share my thoughts on that. All right. Without any wasting any further time, let's start. So the topic for the day is, navigating financial models for startups. I would just request if, uh, okay, if everyone can switch on their cameras. I see very few people, so that probably everyone can know who all are there live. It is pretty good. Okay. Okay. Better. All right. This problem we really face even when we're doing our own webinars. People take a lot of time to switch on their cameras. But thank you for being such a sport and switching it on early on. So again, little bit about uh, myself, about LFS. LFS is a boutique investment banking firm. We've helped work with 300 plus startups in advisory manner. We've raised funds for 14 startups. 13, it has just been updated. We just closed a deal yesterday, and another deal is a work in progress. Personally mentored 15 plus startups, and on the Indian Stock Exchange, we've raised 50 crores plus also by way of SME IPOs, right issues, etc. So that's a little bit about myself. Now, financial modeling is basically, it is a way in which a founder can express his vision. He can express his thoughts. He can express he or she rather. They can express their idea as to how they want to build the business in terms of numbers. Now, these numbers needs to be in a manner of a storytelling manner, right? It cannot just be random numbers put into an Excel sheet or a piece of paper and with some various or some rogue assumptions or rogue growth rates or something like that. You can just extrapolate. Typically, there are many, financial model examples that you can get on Google free of cost. You can just download it and you can start extrapolating in that Excel sheet. But that will just give you a very raw manner in which a financial model is being done, right? However, when when you really sit down with your own self, with your own co-founders or something, when you deep dive into, asking yourself, asking your other founders difficult questions, where the assumptions don't just remain assumptions, but where they actually remain, they actually come up with some kind of a logic, reason, and rationale. That is what, when it is converted to numbers, when it is put down in the Excel sheet in that form, that is called a financial model or a business plan. It is ideally used to estimate or to examine the future financial performance that that company can have, that startup can have over the next 3 to 5 years. Typically, a financial model or a business plan is made for 3 years minimum and maximum 5 years. Not not earlier than 3 years and not longer than 5 years. That is a typical range in which one must create a financial model, right? You're supposed to use various scenarios, which we'll try to cover in the revenue sheet and the cost sheet, which comes in the next few slides. But that is what a financial model is. It's not just an Excel sheet. It's not just a templatized format. It's not just assuming some various growth rates, but it is really brainstorming. It is really putting down the numbers with backing up with proper logic, reason, and rationale, which conveys a proper story to an investor, and also before an investor to your own self as a founder. That okay, this is worth a story to fight for. This is worth a story to really go that long for the next 5 to 10 years, right? It should not just be okay, some numbers, you did some research, got some number, or number dal diya on the Excel sheet. That's not a financial model, which typically many people, many founders perceive financial model to be as, but it is not that a simple task जहाँ पे you just get an Excel and start, plugging in the numbers out there. So that is what a financial model or a business plan is. So that is why when we are also using this, is just a small insight into what we try to do so that people don't perceive this financial model as, as a, just a typical Excel sheet. We call it as a business plan, because a business plan covers that entire dynamics of the business, of the vision, how he or she wants to grow the business for the next 5 years. It's not just a model, but it is an entire plan. It is an entire strategy. It is entire, story as to how I'm going to work on my revenue, how I'm going to work on my cost. If today I'm having one revenue, one revenue model, how am I going to add a second one? When am I supposed to add? What will be the cost benefit analysis of it? What will be different unit economics of that product, right? So this is what a business plan is, or a financial model. But so this is how we need to differentiate between a normal financial model or a normal Excel sheet template and a detailed financial model or a business model. All right. Let's come to this financial model, or even let's say even valuation. When we are working on a business plan, we work on valuation. I'm starting with valuation in this one because it is important to first understand that how different stage startups, really try to prepare a financial model and try to do the valuation, right? A business plan or a model is never a one size fits all approach. You have to approach every business in every sector at every stage of their life cycle in a different manner, right? For example, if I am running a startup, let's say it's a D2C brand, a D2C brand at an idea stage, I'll envisage my assumptions, my storytelling will be different, when I'm preparing my business plan. It will be different when I'm doing 5 lakh rupee monthly revenue. When I'm preparing a business plan for, let's say, an angel round or something like that. It will be different when I'm doing 50 lakhs monthly revenue. Let's say when I'm looking at pre-series A kind of investment from micro VCs or something, right? There could have been many things which could have been changed in those 2 years of going from 0 to 50 lakhs per month, right? So I'm going to look at the things, my business plan, modalities, metrics, the way I'm thinking as a founder of how to take this ahead from 50 lakhs to 5 crore per month, from 5 lakhs to 50 lakhs per month, from 0 to 5 lakhs a month in a different manner altogether. So I will be creating a new business plan altogether once I reach that milestone, right? So in every level, in every stage as a startup, and every sector also, it will be different, right? So when you are at seed stage, coming to a little bit of valuation so that we just get a hint about what valuation also looks like. At a seed stage, ideally a startup will not get any kind of a valuation. Why? Because there is nothing to show to any investor. Okay, it's at a very nascent stage. Probably the MVP is being developed. Probably the market has not been tested. There is no traction. It's probably just at an idea stage. So you ideally don't get any valuation. Even if you're looking to raise funds, you would have to look to raise funds by way of convertible notes. Okay. And this typically happens from friends, family, maybe a few angels. But otherwise, VCs and family offices, they don't tend to invest at this stage. Coming to Series A, where you're doing decent amount of revenues, where your MVP is established, minimal viable product is established, you can easily work on a couple of methods like a comparable method. that is a CCA, company comparable companies method, and a venture capital method if it is a tech enabled kind of a business or a tech driven business, right? Uh, Comparable method is pretty simple. You try to compare it to your nearest competitors and you try to see at what valuation multiple they have raised funds. Let's say if if I am again, let's say, a D2C brand in apparels, all right, and I see that okay, my nearest competitor is Bewakoof.com or the Soul Store, all right, and even if it's not the nearest competitor, it is a competitor, and let's say if they have raised funds at a valuation of $10 million, they have raised $1 million, so they are being valued. Sorry, their revenue is $1 million and the valuation is $10 million. They're being valued at 10 times of the revenue. Okay, and that's their Series A or Series B or Series C, whatever. Today, if I am raising my Series A, I need to make sure, okay, these guys have got valued at 10 times. At least I can get valued at 8 to 9 times. Even if I take a 20% discount or a haircut on that valuation, I can at least get raised at 8 times of my current revenue. If I am doing a revenue of just $100,000, at least I expect 8 times, which is probably 860, 800, yeah, probably $860,000, right? So you need to make sure that you are somewhere near your competitors, if not, in terms of the multiples, if you're not higher than them, at least you're somewhere near. Venture capital method is again, it's little bit a tricky method. What happens out here is you try to estimate your the exit price or the exit valuation of that startup, okay, of your particular startup by multiplying it with a multiple of your competitors, okay. From that exit multiple, you divide it by your expected rate of return for the investor, which might be, let's say, 3 times, 4 times. Okay. Out of that, you subtract your ask and you arrive at a pre-money valuation. I don't have the working with me right now, but if you guys want, I'll try to share it also later on. And if you want this presentation also, I can share that later on. But this method is little bit complex, but it works very well for Series A startups. Why? Because at that point in time, the venture capital funds get interested, and for them, they want to see the valuation multiples which are more logical and scientific for them at that stage.
Uh-huh.
All right. Same thing happens with Series B.
Uh-huh.
Series B, Series C, Series D onwards. These methods take a backseat. The EBITDA multiple
Jab
comes
जैसे
into the
होता
picture. Why? Because that time the company has grown substantially. They are EBITDA positive. They are
हाँ
not making a
हाँ
loss now. They're going to be compared to larger companies like the
हाँ
listed companies or SME companies which have done an IPO,
हम्म,
who have raised funds, whose valuation happens on EBITDA multiples or PE multiple. So
करना
when
है
you're Series B, Series C, Series D,
सही से
then
खाना
all
है
these typical early stage startup
हाँ
multiples will not work. It will work what is EBITDA multiple,
हाँ
right? You have to be profitable at that
हाँ
point in time. If your EBITDA is,
हाँ
50 crores and your competitor's
आपने
EBITDA
रिकॉर्ड सीधा
multiple
आएगा
is, let's say, just 5 times, you have to do 50 crores
हाँ
into 5 times, which is
अच्छा अच्छा
250 crores. So you get a valuation of 250 crores. Okay. Of course, this is just
ठीक है मैं
science
काम कर दूँ
in
इतना मैं
terms of
छोड़ने
doing
को
the
बोल दूँ
numbers, but asli valuation and deal closure
चार
happens
घंटा
on the basis of art. So you get a base valuation at which you are supposed to start with or not exceed, and then later on the negotiation starts taking place. So this is a little bit about the valuation. Let's discuss about a few essential components in the business plan or the financial model. So first is the revenue model, right? As you can see here. Now, typically, you need to make sure, like here, if you see, we've tried to, establish three kind of revenue models. Okay. Uh, what is like a Yagya pickup van, and Yagya pickup base. So these are three kind of services that the startup is providing, and they are into, logistics basically, and that is what we are doing for, trying to establish for them. Now, you need to make sure out here, very important thing is that today your startup could be just doing one revenue. Okay, you all are just having one revenue stream. But that does not mean कि over the next 5 years वो एक ही revenue stream रहेगा. Okay, the job is to establish that okay, after this, what is the second revenue stream? But not in a manner in which it looks like a, okay, I want to do everything and anything that comes my way. It becomes a classic distraction. You need to make sure your first revenue stream has achieved a certain scale. Let's say if you want to estimate 20 lakhs, 15 lakhs, 10 lakhs, 2 crores, whatever the number was suitable for your business, your industry, you establish a certain scale for that revenue model. And then you go to the second revenue stream. Then okay, now I can set up a team for my second thing. Now, okay, what kind of team I require for my second product? So that is what will come in the next slides also, as to the cost model, right? But when you're doing the revenue sheet or the revenue plan, you need to make sure how you are acquiring the customers. Very important. So when you're talking about acquisition of customers, you need to have a proper go-to-market strategy and a lead generation funnel drawn in your business plan. That is what we do when we are working with startups and helping them on their business plan. We really sit down in detail to understand that what is the kind of go-to-market strategy you'll have. If your target audience is B2B, let's say institutes, college institutes, you are into education, what is your strategy to go to those institutes? Which all geographical area those institutes are there? How are you targeting? Are you going to hire a very senior person? Are you going to hire a junior person? What kind of sales can he bring? What kind of closures can he do? So your go-to-market strategy has to be very strong in order to work on the revenue model or the revenue plan. Because if your GTM is not there, how you'll acquire the customers only? Let's say even if it's a digital GTM, and if you're doing performance marketing on Facebook and Instagram or something, how much are you going to spend? What is the CPC if you spend on Facebook? What is the lead cost? Then do you have a telecaller who's going to call that person, who's going to call the lead to close that lead? You need to ask these questions to create a proper funnel before you arrive at, okay, what are the number of customers, or in this case, number of vehicles. You need to arrive at the price point. The price point is workable on the basis of the unit economics. Okay. Let's say if if you are it's a particular product where your MRP is, let's say, and let's say you don't have an MRP and you are at a stage where you need to find out what should be your selling price and your MRP. How do you go about it? You start from the bottom up. All right, what is your first cost? What is your second cost? You start adding all the cost. Okay, what are the taxes I'm supposed to pay? What is the logistic charges, the shipping charges, payment gateway charges, customer acquisition cost? You go till the top, and then you say, okay, this is my total cost, which is coming 100 rupees. Now, over and above this 100 rupees, I have to let's say I have to pay a retail margin or a distributor margin of 20%. You add 20% to it. Now, after that, you are going to say, okay, this is going to be, my selling price. So you need to figure out the unit economics. You need to work the pricing to determine, okay, I'm getting a good gross margin on my product or on my service or on my software. Okay. Is it something where you need to spend a lot of money on digital marketing? Do you have to do outdoor marketing? Do you have to have salespeople on the ground to get the sales? Revenue banta kaise hai? That's the whole idea in the sheet. And at what pricing? Are your prices competitive compared to your competition? So that is something which one needs to make sure that they're taken into consideration while working on the revenue model. Coming on the cost structure, right? Cost structure would always include first and foremost the salary, which is like one of the biggest cost for any startup, if I were to say. Salary and marketing. Sorry, I think. Yeah, someone asking a question. Is my camera not functional? I think. Is it fine, Shruti? Can you just?
Functional, yeah,
Yeah,
you can
it's
see
fine.
you.
It's fine.
Okay, I think someone had just. Yeah. Okay. So first and
What?
foremost is
One
the.
minute, sir. 1 minute. I have a question. 1 minute. 1 minute, please. See, how do you keep the price when we are dealing with medical equipments? That way, a unique selling product. In Class D, highest riskiest product. Class D, license Class D. Highest riskiest product. If you develop and sell, how we have to keep the pricing? Competition is not much.
Sir, can I do one thing? Can I take your question at the last? Because I'll have
Yeah.
to re-understand the question and then I'll definitely answer it. But I'll take your question at last once I complete the
Okay, sir.
presentation.
Thank you. Thank you.
All right. Thank you. Thank you. All right. So coming to the cost structure, right? First and foremost is the salary, which is your biggest cost. You need to understand, okay, what all kind of people you need to hire. This slide is not shown in this presentation, but if you see this sheet out here at the bottom, which is called organization structure, I'm sure you guys can see it, right? Can you just give me a yes or no in the chat box if you can see
Yes,
the
we can.
organization structure sheet? Okay, okay, great. Thank you. Thanks a lot. So this organization structure consists of the exact or the entire family tree of that company. You know, who is going to be hired, what will be the designation, whose role will be what. Okay. So let's say if today you are having just 5 people in your company, but over the next 5 years, if you want to scale this brand to maybe 200 crores top line, you can't do it with 5 people. So how do you go from 5 to 50 people or 200 people? What are the designations? What will be the hierarchy? Who will be reporting to whom? That everything comes in this org structure. Then in this HR sheet, if you see the sheet next to it, your salary structure comes there. The people whom you have got in the org structure, when are you actually going to hire them? What will be the salaries? How many people we require? These are the questions that we typically ask our founders because it's very important for us to know. And sometimes the founders are in a a very aggressive manner कि नहीं हम लोग तो पहले ही month में 20 जन को hire कर लेंगे in this you know we'll be hiring in the first year at least 100 people and sometimes they are very vague. The answers are vague because that does not match with my revenue model. If in my first year I'm doing a business of just 2 crores as per my assumptions and story in this business plan, and if I say for the 2 crores I require 100 people in the first month itself, it will not match in any business. 100 people say 2 crores is very less. I mean, they should be capable of doing at least 20 crores, then you get 100 people. Of course, I'm just giving a very vague example. This depends from industry to industry, startup to startup. But the point being that you need to make it very logical, that it should be matching your revenue plans also. You can't have abnormal hiring just for the sake of it. Then you start covering all other costs like travel cost, staff welfare, which includes all the any kind of trips or PF, ESIC bonus. It includes some cricket tournament or something that you want to do internally for the team. So anything that takes care of your staff, other professional fees, training, your rent, electricity, water charges in terms of infrastructure, subscription charges. Let's say if you subscribe to multiple platforms like Zoho, like Tally, like any other CRM tool or ERP tool, you have to pay a monthly subscription. So that gets covered there, right? All these things start get covering in this operating expense sheet, which is the OPEX sheet, which is your monthly fixed and variable cost on a monthly basis, your monthly cost. Just one. All right. So that gets covered in your OPEX sheet. Okay. Coming to the next one, right, which is your cash flow sheet. Just before cash flow, we'll go to the next one, which is the capex, and then I'll come to the cash flow. So this is your capital expenditure sheet, right, which includes all your one-time expenditure. Like you have to purchase computers, laptops, maybe printers for your staff. You're doing an app development, you hired an outside agency, is going to charge you 20 lakhs for it. Develop your website and your tech platform and your app. Let's say you put 20 lakhs out there, right? This all happens one time. Time cost. Let's say if you have to set up proper infrastructure in your office, you purchase a new office, 1,000 square feet, you need to do painting, you need to do this, you need to do that, purchase some, furniture fixtures. Again, that's one-time capex that all gets covered here. Now, as a tech startup, predominantly this capex is very less. But yes, if you are a non-tech startup, maybe the capex could be on the higher side. Because as a tech startup, you won't have, any other kind of cost like plant machinery. But if you are a manufacturing or a non-tech business, you might have plant machinery as a big, very big capex cost, land, plant, machinery. All right. Now, this we need to typically have a look as to this is related or correlated in terms of formulas in this Excel sheet from the OPEX sheet. Okay, where people can really go down and then they can, it will just be auto linked. You don't have to manually do it. The beauty of creating any business plan or financial model should be that no one has to write anything manually. It has to be all automated. If you're putting something in one cell, you go from one cell to the second cell. Right? It goes from one sheet to the other sheet automatically. Then comes this cash flow statement. Now, cash flow statement is the Bible of this business plan. Why? Because here you come to know your most important figure, which is basically two things. Number one, how much funds are you going to raise? Okay. So let me just first come to, okay, so number two is when are you going to break even at an operational level? I'll explain you this in just a bit. But when you see this cash flow means just forget this FAME subsidy, it is because of the specific plan. But cash flow means your revenue minus your OPEX minus your CAPEX. Okay, so how much receipts you have generated in that month, your revenue income, cash income. Let's say you might be having a split of the revenue. Maybe you are having, what do you call, just 50% you receive upfront, balance 50% you receive after 30 days, after 60 days. Your debtor cycle is at least 60 days. Okay, so you need to make sure you're mentioning in this sheet your revenue as the receipt revenue, not the booked revenue, not the billing amount, but your receipt amount. So you need to put that out here. Again, your OPEX, how much are you actually spending? If you're spending on rent in that month, all this OPEX sheet that we did up will be coming here. And the CAPEX which we did this down would be coming here. So when you subtract these two from your revenue receipt, you come to know what is your net operating cash flow. Is it positive or negative?
Sir, 1 minute, sir. What is OPEX and CAPEX, sir? Internet was disturbed while you were talking. So I'm joining again. Just 2 minutes you take, OPEX and CAPEX.
Sir, OPEX is operating expenditure, which is your monthly fixed and variable cost. For example, rent, salary, subscription, professional fees, traveling expense, water charge, marketing expenses. All these are your monthly operating expenditure. To run a business, your operating expenditure. These are a few examples. Coming to CAPEX is capital expenditure, which means your one-time cost. Let's say if you have to build a plant, so you need to invest 10 crore in that plant, one shot, right? So that is your CAPEX. If you have to buy a new computer or laptop, one shot, 1 lakh rupees ka laptop is needed by the team. You need to buy it. So that's a CAPEX, right? So that is what capital expenditure means. Now, when you subtract the two, you arrive at net operating cash. And down you will see is cumulative, which is of course the current month net operating cash flow, and add add that to the cumulative cash flow till the previous months. Okay. Now out here, what happens is that in this particular sheet, as I said, two things that you come to know. Number one, the cash flow required to raise funds from investors. Number two, when will you break even operationally? Okay. Now in this presentation, this screenshot is only till here, but I'll explain you. How do you identify the funds that is required to actually raise funds for the next 15 months or 12 months or 18 months runway? Typically, as a startup founder that pitch to us daily, they just come with a random figure saying that, okay, we want to raise 1 crore. We are going to spend 1 crore, 30% marketing, 20% this, 30% that, 20% that. But that's not the way of how do you arrive. They don't know the way how they've arrived at 1 crore. It's just 1 crore random figure. अच्छा ये मेरे को लगता है कि this will be suffice, and they do some back end calculation and come with that figure. But now when you work on this business plan, you will exactly come to know. You see this cumulative cash flow here, which is the last row, and you see all this negative 57 crores. So this is rupees in lakhs. When you see this last cell, it is 57 crores, right? 5700 lakhs means 57 crores, which is negative, which is an M8. This is M6, M7, M8. M0 being the current month in which we are. Okay. Now, when you take this cumulative cash flow till, let's say, M15, and by M15, if there is a cumulative cash flow negative of, let's say, 70 crores, that means that you require to raise 70 crores for the next 15 months runway. And if you are doing, like, if you're at an idea stage or doing just 5 lakh, 10 lakh rupee monthly revenue, to raise 70 crores will be very difficult. You need to be in that situation to raise that kind of funds, right? Guys, just give me like just 10 seconds. There's someone at the door. Please give me 10 seconds to just come back.
आता नहीं आता 1.5 लाख हो गए 2 महीने का काटूंगा तो ₹1,00,000 उड़ाता हूँ
All right. Hi guys. Sorry, I was there was someone at the door. Okay. So now when you see this cumulative cash flow here, let's say if by M15 there is a 70 crore negative in red, that means you are going to have a burn of 70 crores for the next 15 months, which we need to raise from the investors. And this is even after including the revenue, after including anything, your working capital, fixed cost, your capital expenditure, everything gets covered here, and you require to raise 70 crores. That's a full and final amount, because that's how you are preparing your business or your startup to grow, right? Okay. It might be aggressive in someone's eye, it might be defensive in someone else's eye, but that is what you want to build your startup towards. And that is where you require your burn is going to happen 70 crores, and you can raise this 70 crores like this. Coming to the second thing, which is your operating break-even point. Now, when you see this net operating cash flow, which is the second last row, when that on a monthly starts becoming positive. Right now, it's complete negative. If you see here, when that starts becoming positive, right? When your monthly revenue receipts increase, they are higher than the total operating expenditure and capital expenditure in that month. That means you have started breaking even at an operating cash flow level. Sorry. So these two are very important terminologies or very important things as a founder, which we know that when we are going to break even once we raise a round, and how much money do we require to raise in this round? Which most of the founders don't have the correct answer to this, and the figures are very vague. There is no working, there's no calculation, no logic. When founders come with that kind of a figure. So this is about the cash flow, the capex. These are a few KPIs that we generally try to put for each of our startup, business plans and startups that we are working with, which I think every startup should have. Little bit KPIs can be different. This is, a few standard KPIs that we usually put, and some additional that we can always change and tweak as per the startups industry and the stage that they are at. We try to put user acquisition cost. We try to we
Devansh, I guess you're speaking on mute.
Voice is not coming. Hello.
You are muted.
Yeah, he's mute, I guess.
It's muted, Devansh.
Mr. Devans, you are muted.
Devansh, not sure if you can hear us, but you're on mute.
See, I can't hear it. Can somebody hear it?
Yeah, no one can. He's on mute.
No, nobody can.
Can't hear.
Mr. Devansh.
Okay. All right. Sorry. I think I went on mute by mistake. Okay. Thanks a lot for messaging. Till where did you guys hear? was this executive summary sheet clear or no?
No,
Here
since
only,
I
here
think since
itself.
the start, there was a gap. So
Yeah, you can just do the executive summary bit again, I guess.
For 5 minutes, we are not able.
Hello?
yeah. So Devansh, you can start with executive summary because I mean,
Hello?
since
Just wait. I think I cannot hear us.
Maybe your headphone would have gone battery.
Just 1 minute. Am I audible, guys? Am I audible?
Yeah, yeah,
Can
yeah.
just
You're
someone
audible.
tell me?
yeah, you're
Now it's
audible.
okay. Now it's okay.
Okay, but I think I cannot hear you guys. I just need to switch off my Bluetooth and switch it on. Okay, can someone speak something again? Kedar?
Yeah. So we can hear you, Devansh. Am I audible?
Now it's, yes, now, yeah, now I can hear you guys. Thank you.
So we were
Okay, till
saying,
where could have,
yeah,
did you
executive
all,
summary onwards, you can start.
so executive summary, you could hear?
No, we couldn't.
Okay, so this executive summary is a one-pager financial summary of if an investor wants to see all the metrics, all the KPIs in one page. This is something that we always prepare for the investors and to keep it handy so that we have all the important metrics of our startups in one page itself, right? Whether it's your user acquisition cost, customer acquisition cost, your growth rates, lifetime value, ARR, MRR, customer acquisition, burn rate, what is your runway for the next, for XYZ months, what are your margins like, right? What are your ratios, other ratios? So everything comes in this one pager. So whenever you want to talk about numbers and just crisp and clear numbers with any investor, he wants to have a look at it, then you just hand him over this executive summary, and everything will be crystal clear in terms of numbers, right? So this is something that we tend to prepare, and it's very important because it just gives all the KPIs, all the key metrics in one page itself, right? Now let's try to see how an investor perceives the financial model of a startup, right? As an investor, of course, I've gone through the pitch deck, I do a call with the founder, and then when I go into the numbers, how am I going to look at a business plan or a financial model, right? What kind of things would I expect out of a startup's business plan, and how am I going to perceive them? So first and foremost, your business plan or a financial model has to be very clear and simple. It should convey your message, your vision, without probably even you trying to explain it or you trying to deep dive into it. If it can become that smooth, I know it cannot become 100% smooth that you don't have to explain anything and he understands the whole number crunching that you have done. That's not possible. But if you can understand moti that okay, this is something that you're trying to do, and you can convey it clearly with your words and your numbers on the sheet. Trust me, as an investor, it really gives a very good positive sign that okay, this guy is clear with the numbers. The story is looking very much possible. It is not just a daydreamer story. He's put any kind of a number into the picture, some vague assumptions, vague growth rates. It's not like that. He's really thought it hard behind every number to arrive at that number and to put it in that Excel sheet. Right? That is what we try to do also when we are working with any of our startups today. Very important. Right? Make it simple. If someone wants to edit it also, he can just edit one number and automatically other numbers will be changed. Right? Then comes the validation of assumptions. As an investor, I'm going to validate your assumptions. Why have you taken X? Why have you not taken Y? Can you show me what is the research back behind it? Can you explain me your logic behind this assumption? See, assumption does not mean कि हवे में कोई भी तुक्का मार दिया as a as a number. That's not assumption. Assumption means that there has to be some reasoning behind you choosing to take that number. If you have taken a 5% growth rate, I'm just giving a hypothetical example. If you've chosen to 5% growth rate, why 5%? Why not 2%? Why not 10%? So your validation of that assumption has to be very clear to an investor, either in your business plan or either you being able to verbally, explain. Okay, it has to be a macro level assumption validation also that okay, this big it is the market, and it has to be a micro level also from a standpoint of your you as a founder's vision. Okay, this is what I'm seeing, and for this to happen, I need to spend an X amount or a 10% growth in marketing. I need to spend that. Then only I can see the result, because this is what my experience says. This is what, after talking to XYZ people, tell me. Third is scalability and growth potential. Okay, so scalability and growth potential, and one word which is missing now, which is missing in this one, but which is a need of the hour, is ability to achieve profit, or your road to achieve profitability. So when you are scaling and growing, it should not be at any cost. It has to be in terms of you being able to achieve some kind of EBITDA level profitability in the months to come. If you say, okay, for the next 5 years I'll be only burning money and loss making, I'm sorry. Now that thing has changed, which was probably 3 years back, where people could invest in any burning, any loss making kind of a startup. That has changed, and that has changed drastically. People are taking cognizance of companies only which are having a vision that okay, I'm going to achieve profitability in the next 12 months. I'm going to achieve profitability. I'm breaking even in the next 6 months, in the next 14 months. If you tell me anything which is beyond that, which is like a very far off number, then I'm sorry, that becomes very difficult for an investor to really accept that अच्छा ये तो मेरा ही पैसा डुबाते ही रहने वाले, burn ही होते रहने वाले. So scalability and growth, there should be a potential, of course, without growing I mean, there is nothing without that growth, but at the same time, not at the cost of profitability. Fourth is risk mitigation, right? So that your financial model should be made in such a manner where you're taking into consideration the risk and how you're going to mitigate the risk in terms of numbers, right? Let's say if you are estimating in your industry, some kind of a headwind to come, right? Which could be a big challenge. Let's say, some political scenario could come, if you're working in a particular state, and if that state is going, or you're working in 3-4 states, out of which one state is, or 2 state is going into elections, right? You need to understand that, okay, in the next 6 months or in the next 1 year, today we're in Feb 24, Feb 25, that 2 states are going to go into elections where my majority of the business comes from. So how do you put that mitigation of risk in today's business plan? Because you need to show that to the investor. Me as an investor, I will be so glad if I see that founder is taking that mitigation strategies, and estimating that okay, after 1 year there are going to be elections. तो उसका plan क्या है वो time का? 2 months before the elections, 1 month or 2 months after the elections, and during the elections. Those 4 to 5 months, what is my plan to mitigate this risk? Because during that elections, my business is going to be hit for sure. So how am I forecasting it? How am I foreseeing that threat or that risk? And how do I mitigate it? So that should be included in your financial model. Fifth is alignment with business strategy. Of course, as a business plan, you need to align your numbers with your strategy, and then of course your strategy with your execution. Without that, this business plan will be a normal, just a model or a template. Sixth is realistic projections. I won't say conservative, it's the wrong word, but realistic projection is very important. You have to be realistic. Don't make it very aggressive just for the sake of making. Yes, you need to have a bold story to say, to communicate, but that does not mean that you say anything andhadhuni, nor make it conservative. Make it realistic. What you feel, what your vision is, what you believe this industry in the growth can be. Make it very conservative. Sorry, very realistic. Right? So these are a few points which, as an investor, anyone will see when they are seeing your financial model. Make it true to the point. Make it true to your vision. Make it true to your story that you want to build. Don't just build anything because someone else has built or because you're getting some template where the growth rates are any assumed growth rates. So that's about it from my side. Let's open it up for Q&A. This is just a little bit brief about us, where you can reach out to me or to my team, and we are happy to take questions.
Yeah, you said finally you will take my question. Devanshu,
Yes,
how to
Devansh.
price?
Yes,
See, if I
Devansh.
my very
Devansh.
careful, Devansh. Okay, I am doubly difficult to pronounce your name. Anyhow, it's a proper noun, so I can spell it in any other way also. Fine. See, how to price it? See, technology readiness level 3 I am in now. So technology readiness level 6 I am aiming after getting fund. So how to proceed further? Financial model, what to tell? Because I need further funding, then only I can go to TRL 6. My classification of the equipment is.
So you are not making any kind of revenues. You're not making any kind of
I'm
business.
not making any kind of revenue now.
Okay. All right.
Only relying on government grant.
Okay, you have some government grants.
Yeah, I got 2 lakhs to start with. I came up to TRL 3 with the 2 lakhs.
No, then you can approach the Startup India Seed Fund scheme. I
Yeah,
mean,
I
that
have
is the
gone.
best.
I have gone for startup Tamil Nadu. Just now applied for 15 lakhs.
Okay.
I'm asking you about pricing. I'm asking you about pricing. If I reach
Pricing
TRL
of?
6, type D, class D equipment, highly risk equipment.
No, but for that I need to know what your equipment is, what your business idea is, who
Yeah,
is your
idea
target
is
customer.
yeah, I will tell you. Of all the 3 things now itself, I will tell you. My idea is to predict blood pressure during dialysis. During dialysis, BP can go up or go down. That we are predicting it before half an hour. So for that only I got fund and developed the TR3. Customers are nephrologists. Wherever
Sorry, whom?
dialysis machine, nephrologist, wherever dialysis machine is there they will go for this equipment.
Okay.
So aim is to go for TRL 6. Then
Say,
only I can sell.
what's your name, sir?
Dr. Saravanan.
Sarvanand. Dr. Sarvanand,
Saravanan.
I believe we need to really, I mean, we can do a little bit more detailed call, because here we'll not be able to go into the details about your business, about your cost of producing your equipment, about the various other fixed costs that you have in your company, what are the margins that we can put on your price on your product, and at what pricing that we need to price it as, right? So we can do a detailed call to understand all these things, and then
Yeah.
to work on it, maybe to work on the entire business plan, which will give us a proper insight into the unit economics, how big can the company be, what are your various revenue models that you can charge, etc. Whether it will be subscription, whether it will be a one-time sale, are you working on the hardware
Capex
part?
model only. Capex model
I
only. One-time sale. That's it.
Okay, so you are
Because
just working on.
licensing, we cannot rely on subscription because the doctors, they will not pay correctly.
So now that there are so many software tools that doctors also subscribe to, hospitals also subscribe to. So I don't
No,
think
we are
that's a major.
interested. We are interested. Once sell it, fine. We will give service backup. That's it. That is for India. That suits well.
Okay, you know
There
it
I
better.
have 12 years. 12 years I worked in Indian market dealing with doctors.
Okay, you
Medical
know it
equipment
better,
selling
but
only.
so the pricing we can only figure out once we
Yeah,
understand a
all
little
this
bit more
data.
about your.
Okay, you mail your mail ID. You give me. I will mail you. And whatever charges also you tell me, then we will work it out.
Okay, so I think Kedar or Shruti will put the email ID, or I'll put my email ID in the chat box also.
So chat box, I
In-
will put my mail ID. You can take down.
no, I'll put my email ID. You can take it
But
down.
everyone can note down. Thank you.
So Shanmugam, you can put it in the WhatsApp to me or Shruti, and then we can take this further.
Yeah. Okay, there
Yeah.
are a few questions on the chat. I think Raghuveer is asking, we don't have any figures as a startup early, no revenue. So what data will we need to prepare the executive summary? So yeah, executive summary, you need more. So it's a mix of present and future data. If you saw the first part of the executive summary was more about the future data. That what your year 1, year 2, year 3, year 4, year 5 revenue could be, acquisition cost could be, margins could be. So it was more about the future. And the below the second table was more about the present data, right? So you can still put the future data. That's not a problem. Coming to Vijay Gemnik, what are those characteristics that a startup displays before becoming a unicorn? यार हमने अभी तक कोई यूनिकॉर्न किया नहीं है. Difficult to answer, but uh, I feel that I think transparency, integrity, hardworking. So I think everyone would be hardworking, but being transparent about your business to the investors, having strong integrity, and creating something innovative. I think those are a few displays or characteristics as a startup that can help that startup become an unicorn. Need to be good at sales and marketing to have that particular quality also. Someone in the team who can do that. So yeah, a couple of 3, 4 of these ideas or characteristics that one can really follow to become a unicorn. And I think very important, you must study the current unicorn founders. That would be something better than my answer. But if you study a few more, there are probably over 30, 35 unicorns, over 100 unicorns, which you can study and figure out that, there are so many podcasts and interviews available of them. So I think you'll get the characteristics from them. Rihan has asked, okay, for product-based startup manufacturing, what is the scope of including?
Somebody asked my mail ID. Shall I put it in the chat box?
Sorry?
Someone have asked my mail ID. Shall I put it in the chat box?
Your email ID.
No, someone have asked. I don't know who asked me.
Yeah, you can put it. Okay.
Okay.
So Rehan has, okay. Yeah, R&D cost would predominantly go in the capex, because that is just one time it is going to happen. Maybe it will happen for 7, 8 months, but that is still one time. It's not a recurring cost that you will continuously keep on putting. And yes, if you have a salaried person in your R&D, or someone is a proper researcher or something in your team, then that will go in the salary or the payroll sheet, and that will automatically go in the OPEX, but not in the CAPEX. But if you are having some specific things to build that prototype, which is one time, then that will go into CAPEX. That's a simple definition. Chirag. So, Chirag, when you see this cash flow statement that I had showed, that is predominantly the core business activity only. But when you are asking about the cash flow from, from your cash flow generated from the core business operations, I believe you are also referring to, or you have referred to the, the audited financial statements cash flow sheet, if I'm not wrong. And out there, the cash flow format is a little bit different. But we need to understand that we are not following that. We are not following that compliance-driven cash flow statement in this, because this is for investments, right? Here we are following the cash flow statement. Why? To understand what will my net burn be, which I need to ask from my investors. So for that, this is this cash flow statement. Okay, it is not the compliance wala cash flow statement. I understand that whole format and the schedule is different, but this is more for estimating your net burn and your ask that you need to do from investors. Okay, Vijay, yes, Vijay, you have a question. You can unmute and ask.
Yes, Mr. Devnesh, right? Again,
Devansh.
Devansh. Sorry, I am spelling it wrong. Okay, there are just a few questions. One is going to be that you will be sharing this Excel sheet template to us to work like a kind of this thing. We'll be sharing this.
No, so I cannot share the Excel sheet template. That
Okay.
will be difficult. But I mean, I'll share this presentation, but not the entire Excel file, because that is our proprietary business plan document where we
Okay.
work with the founders to create this business plan, right? And
Mhm.
so that is like a chargeable service that we do for our startups, right?
Okay.
It's a because it's a very in-depth process of 6 to 8 days, where we sit down and brainstorm with the founders and go into complete details.
Okay. That's point number one. Point number two is going to be like consider my startup. We are kind of an artificial intelligence based manufacturer with a tech based company. Okay, it has like a two capex model is there. One will be on the IT side, one will be on the manufacturing side. How we need to assign it? That is the second question. Third question is going to be like how to make the calculations, the capex investments, how to make it, because service industry is separate, manufacturing is separate.
But they all are in
But
same
both,
company? Is the same company or different
no,
company?
it's the same company. It's a product development company. Develop the product, we research the product, produce the product, and we take it to the market.
See, it's very, very simple. Capex means whichever is your one-time cost. Just break
Okay.
it down into which is going to be your one-time cost. Let's say if you're developing a software, you've given it to a third-party agency. They say, okay, your total bill is going to come to 25 lakhs. Okay, but I'm going to deliver the software to you over a period of 4 months, after 4 months. And you have to give me those 25 lakhs over this period of 4 months. So
Okay.
advance 5 lakhs, uske baad wapas 5 lakhs, then 5 lakhs, then 5 lakhs. So
Okay.
this whole 25 lakhs will go into capex, because this is going to happen just one time.
Okay.
Though you are giving in 4 installments, but it is a one-time cost in nature.
Understood.
So whether it is product or service, your definition of differentiating a capex and opex is very simple. If it's recurring, like salary, rent, subscription, water charges, electricity, marketing cost, digital marketing, anything, staff welfare, traveling, that all is opex. If it is
Okay.
one time, then it's capex.
Now, once again, for example, I'm just taking a mission for rental purpose for 5 years. That comes under OPEX or CAPEX?
What is it? Can you repeat?
Okay, I'm just taking a mission. Consider laser cutting machine. I'm just taking for a rental basis for 5
It's
years.
opex. Since it's
It's
rental,
OPEX.
it's opex. Yeah. If you're purchasing it upfront and you're paying 10 lakhs, then it's capex.
Okay. But I'm just pumping big money for 5 years rental. I'm just paying it an upfront.
Then you can take it in capex.
CapEx. That's what the confusion is. Okay. This is the third question. The fourth question is going to be like, till now, I just pumped in like a big money for this project. Consider you can take it as an MEP or R&D or team building or whatever you can say, like 2 years of investment I have just done. But mostly like 60 to 70%, it is not accountable. Okay, all these money is being pumped out from my NRI account from Dubai. How we can able to mitigate this problem? Because whenever I just go and discuss with some investors or somebody, they ask me, "What is the investment you have did it?"
But it
I
is
used to
your.
say,
Yeah, go ahead.
sorry.
Sorry.
I used to tell them that for on the calculation side, we have just through accounts from the India-based account, we have done so much, and bills are available and statement of accounts are available. But 70% is through the Dubai account. I have done it. For example, considering the imports of the material or taking a loan from Dubai, all these things are being done through Dubai. How this problem can be mitigated?
But it's your account only, na, or your mother's or father's or someone else's?
No, it's my personal account but the company, I am the founder and CEO of the company, but legally my mother is the director of this company.
So who are the shareholders in this company?
Myself, I mean, my mother and my friend. That's it, two people. But the shareholder, he is just
So
getting a
then,
20
so
quid.
then, so then you have to show yourself also as a equity shareholder since
I
you are
know,
pumping in.
I know. But the problem is that due to some astrological reasons, I couldn't able to step into it. That's
So
why I
then
just
you
put
can
my.
then you can show it as a loan to the company, but you need to just check with your CA if the taxation and all those things don't come into the picture. Otherwise, you can always show loan from Vijay to the company. In the company's books, you can show as a, you know, 1% interest rate loan.
No, those things we have already done. My question is that, see, 70% of the expenses, it's been done through Dubai. Credit card, Citibank, Mashrak, and Emirates MBD. We have spent money to China import and some XYZ. You can just take it like that. But my point is, they are asking for a list of accounts, list of bills, which is not quite possible. How to mitigate it?
Why the bills are not possible?
See, there will be too much of petty cash based systems, and on 90%, it's going to be like import
No,
kind
but
of a
if
thing.
it is, so if it is import, you would be having some bills, na? You
No,
purchase
no, that's fine.
something.
I'm just telling you, whichever it is available, we are already holding it. Okay,
So
considering I'm just
if I am assuming if what is available is little substantial because you've done major machinery or some imports or something, and you spent a good crore or something like that on these imports and stuff, then it is
Hmm.
substantial. So even if you get 75-80% of the bills ready, then I think that should solve the problem. Another could be petty.
Almost like I can able to arrive around 40% only, not 60% also. Because see, I'm traveling to Mumbai, Delhi, or Dubai, or China, wherever. I used to use my credit card. I used to do my transactions, and no bills are there. I mean, you can't able to take the bills on it. For those problems, how to solve it?
No, but if you're traveling, so your flight tickets and all that would also be there, na? So that way you can get the invoice.
Okay, invoices we can able to raise it. That's not a big deal. How about
Yes,
the
you're staying in the hotel and using your credit card. Again, you'll get the invoice.
No, it's bit tough actually. In China and all, we are not getting any bills.
Ah,
Yeah, and Dubai also, we will not be getting bills.
okay,
Yeah.
got it. No, so then it is
Sir, 1 minute, sir. Shall I tell my idea? How about credit card statement? Statement, it will reflect, no, where you
No,
have
statements
swiped
we are
that
having
card.
it, sir. Statements we are having it. That's
So that
cool.
itself is a good record.
But then it's okay, fine. I can able to produce that. That's not a big deal.
that is also a good idea. Yes.
Yeah, yeah, yeah. If people
Even
can
if
able to
it,
accept credit card statements, I'm
yeah,
okay with it.
if it is all legit and there is no cheating, then I mean even 18-90% should be okay. If you don't have 10-20%, which could be petty cash, but otherwise at least 80-85% should be substantial, and then that is fine.
Oh, then it's okay. Fair enough. Fair enough. No problem. Cool.
All right. Thank you, Vijay.
Thank you.
Christina
Thank
has
you.
asked, okay, could you please share this model? No, Christina, we cannot share this model. It's proprietary for LFS and our clients. Uh, Rahul, if you're getting a product manufactured through white label contract, you need to take the cost components in OPEX or individual product unit. Yeah, so this will be in OPEX only because even if you're getting manufactured it white labeling, it is for you, it is your cost of goods. So it becomes your OPEX. And yes, of course, in individual product unit economics also it is like a COGS. If if you're purchasing it at 80 rupees, your COGS is 80 rupees, you have to take it out then. That 80 rupees includes your the entire contract manufacturing, the landed cost in your factory or in your warehouse. So that's 80 rupees. It comes in COGS, which is a part of OPEX. How can we make unit costing table? Unit costing table is not very difficult, I would say. BV can in pharma. You have to go from a complete top-down approach. How much are you selling at? What is your MRP if you are a product based? Out of that MRP, you reduce your discounts and GST. So you arrive at a net revenue. So that was your GMV. MRP is your GMV. Out of that, you reduce GST and discounts, you arrive at net revenue. Out of which you remove your COGS, your cost of making it and landed cost. You arrive at your gross margins. From there, you delete you subtract all your other cost like payment gateway, logistics, shipping, you arrive at contribution margin 1. If you reduce your customer acquisition cost, you arrive at CM2, contribution margin 2. If you reduce your other branding and other fixed cost, then you arrive at contribution margin 3. And then if you just reduce your branding and marketing, then you arrive at CM3. Then if you reduce your other fixed cost, you arrive at EBITDA, which is earnings before uh, you know interest, depreciation, and taxes. So this is how it works. Aditya, how much are the charges? Charges for what, Aditya? I did not understand. If you can be more specific. Shubham Sahamate, for a deep tech startup and the tech development years. What do investors look for in the long term? So if it is in aerospace, when the tech development is going to take years, they're obviously going to look after those years. How much revenue potential does this have? How innovative this is? Can you create multiple patents or IPs on it? Right? Is your technology patent granted? Patent holds a huge good value basically as a startup. Can you do that basically? And of course, what kind of revenues can this turn into? Can it become a global company if it's into aerospace? Right. So factors like that will come into consideration. And that is what you have to consider when you sit down to create a business plan. Okay, let's come to Raghuveer, I think, on the
Yes, sir.
video, I think, question.
Yes, sir. I have two questions. How much will it cost me to make the financial model of a startup when we don't have revenue generation right now? And the second one is, can we get an idea as to how to recruit the right people? Because we are spending on advertisement a lot of money, but we are not getting people. Not a single staff is there right now.
Okay, so first thing is, if you're not making revenue or if you're making revenue, our charges to prepare the business plan are fixed. Ideally, this would not be the right platform to comment on the fees right now. We can definitely take it offline. You can get in touch with me, and then we will understand your business. We'll see whether it, first of all, you need it also or not, and if we feel that you require it, if there's a genuine thing where you require the business plan and the model, then we can definitely help you and we'll convey the charges to you. Right? If you're fine with it, then we can work on it together.
किस्मत हमारा है कि आपके साथ लंच करने का.
Okay?
Yes, thank you. And the second one is, I had asked one more question, sir.
वन में नहीं में खत्म हो गए 2 मिनट में जो 4:30 का था.
Hello,
कोई तो म्यूट पे चले जाओ, पता नहीं कौन है.
hello.
हाँ, yeah, Raghuveer. Second question is,
Yeah, I cannot get right people to work even after spending lakhs of rupees on advertisement. So how do I solve that problem?
yeah, it's a good question, Raghuveer. It's very difficult to get the right person. You have to try till you succeed. We always, even in our company, in our startups, in our portfolios company, it's a trial and error till you know, till you probably wind up the business. It's always going to be a trial and error. So you have to keep trying. Advertisement से कुछ लेना देना नहीं होता ना hiring का. But if you are going initially,
Newspaper.
I would only suggest, newspaper and all those things. I don't think it works in today's time and age. But I would only suggest, if you're looking to hire a good person, try to go through your networks first, and be very clear with whom you want to hire, what's the JD of that profile, right? And go through your network rather than going through newspaper and random leads that you might generate.
Okay.
Right. That's how probably at an idea stage you will be able to build that core team. Your
Yeah.
core team of first 5 to 7 people, 10 people, that has to be very strong. So create that team in a manner that कहाँ से कुछ reference लेके आए, मतलब,
Yeah.
some good reference would make a good sense.
Yes.
All right.
Thank you.
Yes. I think Jay has a question, or Vikrant. Jay or Vikrant.
Yes, hi Devansh. So
Yeah, hi Jay.
basically, we have one aggregation like e-commerce platform, and like we are not very much sure about like how much it can grow. So we have last 2 years of like transactions and all the things. and we want to like
In what business, what products?
they are into like multiple products which are made in India, more into like Indian culture and books and like more about like home decoration knowledge, things like it. Not utility products.
Okay, all
So
right, got it. Yeah, I
so
mean,
we
it will be a very vague answer by me if I just comment ke chalega ke nahi chalega. I need
yeah
to really deep dive into your business, probably go into a very detailed business model and plan what you have in your head for next 3 to 5 years, understand your current unit economics. So it number crunching. And first of all, before number crunching, also to understand where you are, what are your products, what are your current margins, who is your current target audience, how are you marketing, what's your customer acquisition cost. So ये सारा चीज we'll have to deep dive little. It will be very raw or vague to give you an answer just randomly on the basis of one sentence of what you are doing.
okay,
Uh, you can probably write an email to me and then we can schedule a call to understand and we can take it up from there.
sure, I will write to you. Thank you.
Thank you, Jay. Yes, Vikrant.
Yeah, so my question is regarding 3 year and 5 year projection. So we currently are in testing phase of our product. It's a pain relief product, a van. So right now, what we did was to identify customer interest. We did digital marketing using social media like Instagram. So now, if when I see that sheet for all those projections, how would I know how many customers I can acquire in, let's say, 3 years, uh, out of total addressable market for our product? Because it can be very vague. I mean,
We need to
we
we
can.
need to study we need to study a little bit of competition also, that how they are acquiring, at what cost they are acquiring, how many have they acquired in the last 1 year, 2 years, how much of their marketing spends they have done, whatever information that we can gather of the competition, that will form a good base from where we can start with. Then of course you need to try a little bit for 2 3 months, see that is it working, is it not working, is it different for you, and then probably reiterate it again. See, a business plan is not something which is fixated. Today if I work on a business plan, there would be certain complete different dynamics to it. I might have to revisit it. I need to revisit rather every month and see where are the changes that I can make and then actually make it. So that's the idea. You can always revisit after 3 months and see that, okay, in my actual execution, when my competitors I studied, their customer acquisition cost was okay, they are advertising on Instagram, their customer acquisition cost was 200 rupees, right? But when I started, my customer acquisition cost is probably 300. But after 3 months, I realized it's not even 300, it's going till 500. And I need to revisit my business plan and make the changes in the number. That ये तो competition का 200 था, पर मेरा तो 500 आ रहा है. Now you need to work to improve it to get it to 200, but at least in your business plan you can put the 500 number.
Understood, Dinesh.
Okay, guys, we'll take the last two questions later on. Probably you all can write to Kedar or to Shruti from Wadhwani, or you can write to me. I put my email ID. They will also help you with my email ID, and this is my website and stuff. Also, you can visit it and probably approach us from there too. All right, Pankaj, I think he's waiting some time.
Yeah, thanks, Devans. So my question is, how do you look like in a situation, right? Being investor, how do you look a situation where startup is not having sufficient fund available, right? And they are pitching you for the further funds.
It depends on what stage they are at, right? If they don't have the funds, of course, that is why they are coming to us. So that is
Right.
always a situation where they, either they completely don't have funds or they're going to run out of the funds in the next 3 months, 6 months, whatever, 2 months, 5 months, right? So वो situation ही रहता है, that's why they come to us. That's number one. But our interest or our answer is not dependent on whether they have funds or they don't have funds, right? Because they've come to us for funds, so I'm sure there is going to be a lack of funds either today or in the months to come. So our situation, yes or no, for filtering depends on more about what their business is, about how the founder is he being able to execute, is he if let's say if there are yesterday only I was on a call with the founder, and he was someone who wanted to raise funds up to 3 crores, and he he was a very experienced folk coming from corporate and stuff like that, and he wanted to build something in his own industry where he has worked. Okay, and he had a good capital, but he said, I am not going to invest anything in this business. I am waiting for someone to come and invest 3 to 4 crores. So that is a very big red flag for us, that he is not willing to take that bet on his own self, on his own. He's not being able to take that risk on his own startup. So why should I get him to any investor and get my investor to invest, or get me to or myself to invest and take that risk if the founder is not willing to take the risk?
Okay,
So
understood.
so other multiple factors, but this is just one random example which I'm trying to give, that these are, I mean, you see a lot of things, right? Is it a genuine problem? Is there actually that problem what he's trying to solve? So some
Okay,
things like
understood.
that.
Yeah, thanks. So if times allow, I have another follow-up question.
Yeah, please
Shall I?
go ahead.
Yeah. So we are into
And
automotive spare parts, right? And this is what we are trying to do is we are trying to break through the traditional business, right? जैसे कि पहले we have to deliver the material, and then I'll be getting the payment on that, right? But we are facing problem. We are taking the payments upfront, right? While confirming the orders, and then dispatching the material to our customers. In 99% of the cases, being the new company in the market, right? So people are not believing or keeping their hand tight, right? That okay, you are new, how we should believe, and we are facing this in very frequent way. How to deal with the situation?
I've still not understood your question properly, actually.
Okay, so I'll put it again. So being new company in the market, right? The we are into automotive spare parts, right? New and used spare parts. So most of the time, what problem we face is when we are approaching to customer, or when we are about to close a query, right, or any order, right? So customer is asking either I'll pay on delivery, or I'll be taking some time to pay off, right? They are asking directly for the credit for a week, for a month, whatever it is, right? So we don't follow this policy, credit policy, right? So in most of the time, either customer is running, or deals are not closing, just because that
Yeah.
we are new in the market, and people are hesitating to trust on us.
No, so there are two options. Okay. First option is you give certain credit. It might be a small 10-15 days, and take probably just 20-30% advance, and balance you give on credit. That's first option, which is of course a good option, because you can take the advance. If the bill is 50,000 rupees, take 10-15,000 advance. उतना उतना भरोसा आपको सामने वाले पे रखना पड़ेगा if you all are in the same industry, because you all are going to work with each other regularly, and you need to give him that much products, and then you expect, okay, you give him a 15-day credit or a 30-day credit, and he pays you back. Almost all trading industries work like this, right? So it's nothing new. And second option is that you create your brand in such a manner where people come and they trust you with your website SEO, with your branding marketing, with your LinkedIn communications outreach, with probably having some kind of pamphlets, newsletters in your nearby location to be sent to these people who are actually your clients. They should be aware कि अच्छा ये कौन है, ये company क्या है. So pamphlets, newsletters में, putting out some leaflets. So it will always create awareness that, okay, they are not someone new. The more they see your brand name somewhere, the more they see your logo somewhere, they'll know, okay, yeah, I should be more respectful towards the payment structure with them. तो 15 दिन कर लेते हैं, या full advance दे देते हैं. So that is the two options and two ways how you can increase your conversions. And little bit the risk you'll have to take. If you say that I will give no, credit in a trading business, it's not going to work out. It's very simple.
Okay, got it. Thanks, Devans.
All right, we'll have to wrap up, guys, out here. It was a pleasure, doing this presentation. So many good questions, so many good people, founders out here. Would love to connect with you guys. I'm sorry, I think a few questions are still left out, but please do reach out to me, or you can reach out to someone from the Wadhwani team, and I'm happy to interact with all of you guys and take discussions forward one-on-one. And help you in your endeavors in whatever capacity that we can. Thank you, guys. Thank you,
Great.
Shruti and Kedar, for this
Yes,
opportunity.
thanks a lot,
Thank you.
Devansh. Yes, thank you very much. Fantastic session. Yeah.
Thank you.
So,
Thanks a lot, sir.
guys,
Thank you.
if you have any further questions, please reach out to me and Shruti.
Yeah.
And then,
Devnash, I sent a